Stock market is in absolute free fall because of Donald Trump's tariff policy. As you can see here, this is Dow futures, which got cut off, but it's down 2.87%. Yikes. S&P futures down 3.4%, down 196 points. NASDAQ futures, this is the big one, down almost 800 points, 4%. This is bad. Now, look, who knows what's going to happen? This could drag on for months and absolutely devastate things, or they could change their mind or come out tomorrow and say, got you, we're not really doing this. People are getting tired of this. Our allies overseas are losing faith in us, and if this is some sort of game, it's going to piss people off in a big way. But if you're a new investor, can you take advantage of a day like today? Here's what I'm doing. Now, if you're a long-term investor who's buying one S&P 500 ETF, one technology ETF, one dividend ETF, nothing changes. You just stay the course, keep doing what you're doing. But if you're a new investor and you're thinking, hey, I want to buy some high-quality long-term investments, days like today are great opportunities, and why I am such a huge proponent of writing down a recession wish list. Some stocks that you want to buy when there's a recession and get heavily discounted. Now, I know some people are going to say, you shouldn't wait, you should always be buying, and I agree, you should always be buying. But there are opportunities to be had, like today, to take advantage of some major, major dips. But how do you do it? If you're a new investor, how? What stocks are you supposed to buy? Now, normally, if you're a new investor, I would say, don't worry about the individual stocks, focus on those 3 big ETFs, being consistent, getting some experience, and just sitting back and doing your thing. But opportunities like this don't come often, so here's what I would do if I was a new investor. Because things are changing so frequently with Trump and his policies, you don't really have the luxury of time right now. So what I want you to do is get out a piece of paper or your notes app on your phone, whatever, and write down all the companies you use. This is just the starting point. The companies you love, the companies you use, the companies you trust, write them all down. You know more than you think. You know, people always go, I don't know what to invest in. Of course you do. If you want a latte, where do you go? If you want a Big Mac, where do you go? If you want to stream a show, what do you watch? So start writing down all the companies that you know. Okay, so now you've got yourself a little bit of a list, but what do you do after you have the list? Very first thing you do is you go right here and you click on the menu, which is right here. By the way, everything here is free, but what you're looking for today is this fundamental analysis template. And if you go right here, you'll see a link that you can click on to fill in all of this stuff. It's clickable, it's fillable, but this is kind of what it looks like. Yes, it does take a little bit of time. If you say, oh man, I don't know how to do this, there's a video right down here that'll show you. There are some other videos right here in the description of the template that'll walk you through it. And yes, it's going to take you a little bit of time and it's going to take a little bit of work to do all of this research, but you want to make sure that you're not just buying a company because you like it, but you're buying a company because you like it, you use it, and it has good fundamentals. Now, I would urge you to do all of that work so you're a well-informed investor, but if you don't want to do that, the alternative of just buying whatever you think is good is not great. So this is a little bit of a go around. It's not totally perfect. I would, again, urge you to do the real work, but you would want to go on a website like Seeking Alpha and search for any company you like. So here we have Apple, and you can see that it is down 8% today. Year to date, it's down around 10.5%. That means since January, this is the last 12 months. But if you go over here, you will see stuff like this, ratings summary. There's their own analysts, which I usually ignore, give it a hold. Wall Street analysts give it a buy. And their quantitative research technology thing also gives it a hold. You can look at their factor grades down here to see how the company stacks up. If you have a premium account and you hit dividends, it will give you a dividend safety grade. This is wildly helpful for me. And if you click on Wall Street, it will break down for you all of the analysts who are covering the stock, whether they have strong buys, sell orders. They'll even give you a 1-year price target on the stock, which is right here. I know it's scary. My account is down in the mid-6 figures since Trump got elected. But you don't see me panicking. I know long-term things will recover. And look, for the doomsday people who say, we might not recover this time, okay, you know, worst case scenario, we're hacking our way through a jungle with a machete being chased by zombies because RFK Jr. got rid of Health and Human Services and we can't, you know, do any vaccine prevention stuff like that. I don't think we're going to be running through the jungle going, oh, I wonder what Apple stock is today. So worst case scenario, the world ends, your money's not going to matter anyway, so you might as well invest. And last thing I'll say, I've gotten about 40 DMs overnight from people saying, I'm freaking out, I'm stressing out. Relax. This is unusual. We haven't seen anything like this, I think, ever. This might be the highest tax on the middle class of all time. It's scary. It sucks to look at your portfolio and see your long-term quality stuff getting absolutely obliterated. But unless you are 55 years old and heading into retirement, or you have recently retired, you really have no reason to panic. You have no reason as a 20-year-old to take all your money out of the markets. I urge you to consider holding it and just adding a little bit. That's what I'm doing. I've got my list. I'm buying a little bit slow and steady. I think things could get worse, but I could be wrong. They could reverse their decision in a week. Markets could go up. So I'm slowly taking advantage on extreme down days. Today is an extreme down day. Make sure you smash that follow. Thanks for watching. See you later.